from the absolute basics to something more advanced here. Not totally advanced yet, but definitely something that is important that not many people look at. And we're stepping further and further away from the average retail investor or average retail trader, and we're getting closer to actually having an edge. And the more we understand of this stuff, the bigger our edge potentially is going to be, or at least we're not going to be sitting ducks in this arena of financial markets, this pond full of sharks who are trying to rob us of our money. Slides. Yes, here we are. Just one slide actually that I want to highlight. Price action is still on top because I just am simply of the belief, and you may counter that at some point, but study price, master markets. That's it. That's at least the game that I've been playing, and I've noticed that is where the essence lies. But two important concepts here that we need to understand or have a look at: market structure, and that is just best depicted if I use a chart to show you, and liquidity. So we've heard this term liquidity before, right? The smoothness of the buying and selling. So if a market is liquid, it's easier to buy and sell assets. And that is a bridge to looking and understanding how bigger players or bigger market participants play this game. Because for the average participant, at least when it comes to size, it's quite easy to just buy an asset, right? Let's say $100, $1,000, or $10,000 even, or even 100,000. Depending on how large the market is, how liquid the market is, those amounts are relatively easy to buy. But once you start to get to like $1 million, at least in crypto, that's where it starts to shift. In stocks, $1 million maybe not so much yet. In forex, definitely not. But the larger that size gets, the more nitty gritty, or the more on point you want to be with your buying. You don't want to have you just really want to get your asset as cheap as possible, because it costs a lot of money if you don't, right? And on $100, like 1% is sort of negligible, but it's the same percentile, and you still want to fight for that 1% if with your $100. But it is sort of like less of an impact perhaps than when you get to like $1 billion, right? And also, depending on the size of the market, it's not always easy, as I said, for people to scale in when you are going into this like 7, 8, or 9 figure amounts. And what you need in order, if you want to buy an asset, there needs to be somebody to sell it to you, right? And this is, for example, why a lot of large players, maybe recently, yes, but haven't really been able to enter the crypto markets because they're not liquid enough. There's not enough liquidity in the markets to, for example, allocate $100 million to, I don't know, whatever blockchain project. Anyway, coming back to my point, that large amount of money needs liquidity in order to get their orders filled. And that comes with a certain different approach to markets, right? Where is this liquidity? At around what price can I start to buy? And do I have a high probability that I also get as much asset for the money that I want to pay as possible, right? So that's a little bit of liquidity theory, you can call it already, maybe like a basic concept. But that also, we have some sources that will cover this. So why don't we just jump straight to that? Again, 2 sources are missing over here. As I'm speaking, those sources are still being recorded. We are working together with the folks at Forex Library. We've gotten to know them recently, and they're really a cool group of guys who are playing the Forex game. And they also extensively look at liquidity, market structure, etc. So they're going to teach you a thing or two about that. We also have them as guest lecturers. So you will see that. I'll maybe give a small clue on the chart, but I'll mainly focus on market structure. So liquidity, how that moves around, where the liquidity is, that is quite an important concept. Again, interactive brokers. So coming back to the differences between FA and TA, but from a slightly more intermediate perspective. Good video, I would say, and that's there for you to digest. Divergences. I'll also show you that in a chart. That's the hint I gave in the previous video, and that's where price behaves in a certain way where there is a high and then price comes to make a higher high, but actually the opposite, as you can see, happens on an indicator like the RSI, for example. That shows you, in short, that yes, the price went to a higher point, but the strength behind it was way lower. So there was less strength, less energy, you can also say, in that movement. What does that tell you? Well, basically it required way more effort to get that price only slightly above the previous high, and therefore it becomes very easy to turn it around. And generally, this is one of the indicators, or indications, I should say, that the strength is just going out of a movement. So the RSI works with this overbought and oversold levels. That's the most basic way to look at it. I'm not a big fan of that. I do take it as some confluence somewhere in the back of my mind. Maybe, like, I don't know, it counts for 2%, 3%. But these divergences are way more important. And coming back to, I think, the first video of this week, this, for example, is what I found in the 2017-18 Bitcoin market top. It showed a divergence, and I've used that to my advantage as a point of confluence, at least, buying like $3,100 at that time, or 33, whatever it was. Because I saw, like, hey, yes, people are selling. There's a lot of panic, but actually the most of the energy is out of the move right now, and we could be making a reversal. That reversal, I think, was from like 3,300 to 4K or 4.2 or something like that. So quite a substantial move. So divergences, and they happen on multiple indicators. And they are just a signal to look out for. It means that the strength is going out of a movement potentially, and there is a probability. Remember that word. That there's nothing like should or will. All those absolute terms have no place in trading. It's always about probability and possibilities. So keep that in your mind as well. Fibonacci. What to say about this? I love this stuff. I will share, like, this video is quite good actually, but I will share more sources on Fibs, how that works, and many traders use it. It's, again, when you hear it for the first time, maybe your thing is like woohoo, woohoo, but it really is something to look out for. And in the future, we'll look at some charts and apply this to the chart as well. Now, supply and demand, as mentioned, the advanced source, this goes really deeper into this liquidity game, market structure game, and looks at so this is your bridge to more advanced technical analysis terms. So this, for example, is a source, like this are a club that have a course, or they have several programs that they take students, they charge money for it. I'm not necessarily behind that. That's their game, but I do like his education style, and there are several videos that I like. For the people that are doing FIT, 30 study points, you will see him coming back again, and this video is just really quite good. One very clear example of why I don't really want to make a video, because this one is already super good, at least in explaining the stuff. Okay, so supply and demand, really important concept. Chart, what did I want to show you? So market structure, yeah. Where are we? Well, we are still right here. Okay, so one thing that mainly I like to look at the extremes. When price is sort of like in this area, generally I'm not that interested. There's not a lot of trading volume, as you can see over here, the bars down here. Price ping-pongs up and down, and it's just a patient waiting game. We just had this recently as well. In this sort of area, volume dies down, and it's just not all that interesting. There's not a lot of momentum, like, for example, we had over here. These are the very, like, this is interesting to be trading, most of all, unless you're very, specifically like a good range trader and you can ping pong between these two levels. There's always profits to be made and always opportunities. But for now, I like to look at the extremes, or at least during my study, I really try to look at the extremes to see, like, okay, I want to understand when I need to sell the large majority of my portfolio and just, take a breather for a while. And there is something inherent in this. So we've had, like, speaking of extreme, you see this very, like, extreme price movement to the upside. And there is something inherent, especially in this structure. So first of all, we can maybe check on a high time frame. We can check, here we are. Yeah, you can see here, for example, we've made this high. We are selling. And what we can see is on the indicators here, so we have this divergence over here happening. So we have this, and what happens on the indicator down here on the RSI is what the opposite happens. So basically, yes, we move higher, but the strength is going sort of out of the movement. The energy is dissipating out of the movement, meaning that there's a possibility for this to turn around. And in fact, it actually did, right? But that alone is not enough to go on. I mean, you can try to just basically only trade on this, but you need more signals. So with this in the back of your mind, you're like, okay, cool, potentially yes, but I don't know, do you sell at 47K? Do you sell at 54? Is this going to 80? You know, you don't really know that much yet. So let's have a look at market structure. I just wanted to give this example of a divergence. And if you look at, we can go all the way back on the daily time frame in 2017. Let's move here. There's a quicker way to do this, but bear with me. I'm a boomer. Oops, let's not open Safari. Same thing over here. We have a peak. We have this. We have a divergence, right? So price moves higher, but the opposite happens on the indicator. And what was I talking about later? We have over here, we have this happening. So to the opposite side, price moves lower, but the opposite happens on the indicator. And there were several indicators. I like, by the way, the MFI indicator. I use them usually together. So the money flow index, because that incorporates volume as well. And I use them side by side if I want to look at divergences. So small tip over there. Anyway, so that's divergences, right? That's something that we can use. They are all over the place. You can also find them on different time frames. So yeah, here you see it again to a lesser degree, but also indicating like a top. And there's something inherent in this structure over here, so market structure or price structure, that we can see. But one of the clearest examples that I can give you that also incorporates a pattern is right over here. So we are moving higher, and we can depict our trend lines over here. And what we actually saw being painted here is what we call a rising wedge. Now, again, that's not enough to go on by itself. We want to understand a little bit more about market structure and how that works. And for that, we can go back to how a trend works. And a trend is basically established. I think that is explained. Yes, I still need to record the TA 1.0 video as the first source of 2 chapters ago, and then I will explain trend lines and how this works. So you already know this. You know, whoa, this is like Christopher Nolan stuff. Anyway, I'm having fun, as you can notice. So yeah, so we have a trend. I'm going to pick my draw. So no, let's use it with text. So what we can see, let's start from right here. We have a high. Bear with me. I'm just going to type this out. Right here, we have a low. Let's say we start the trend from there. Then we have what we call a higher high, right? That is, so a trend is established by higher highs and higher lows. And over here we have a higher low, right? And we can sort of extrapolate that into the future over here. Higher high. And again, we have a higher high. And we have a higher low over here. And then, as you can see, so you can draw this trend line if you want. We have the divergence maybe in the back of our mind that is potentially happening. I would like to connect these dots over here. All of a sudden, yes, we use trend lines, but as you can see, they come sort of secondary, just as a confirmation. The idea here is that price paints a picture, and we have what we establish what we call market structure. So a trend up, higher highs, higher lows, and all of a sudden something happens over here that breaks this trend line. So that's signal number one. But what we actually see happening over here, instead of making a high, okay, this trend line can break, and then it can still kind of stop here and go up to form what we then could have called, let me zoom in a little bit, a higher low. But what actually happens is that this low over here, so the last low that we had over here, and even this one as well, but I find this one significant. What we actually see is we make a lower low. So that is a sign of quote unquote trouble. Now, when this happens, this generally means, or there is a potentiality and a certain degree of probability that we see a shift in trend. Now, what we want to see next, or what you generally then see happen next, is that we also make a lower high. And then basically the opposite of an uptrend happens, and we make again, lower lows, etc., lower high, right? And we go all the way down until it shifts back up here again. But I don't want to go that far. I just want to depict this over here. Now, an interesting area. So here come your support and resistance lines. I hope you're still with me. This is just a very beautiful example, and you will see this on so many charts. Like that's a piece of alpha for you. Just try to work with this, see if you can work this out. And what we see over here is that, well, I told you in the previous video, I like these highs that see a big rejection or a big movement after, to me, are interesting price points. So even you can, you could have drawn your line here already. So this starts to break. You want to see like, okay, if price comes back up, to what point can I expect it to go up? In my opinion, this is one of the most interesting points. You could draw a range. You can take this one as well. So you can take this entire area. And there's many, like people draw it in a different way. For example, I like to connect this high and probably take an area where I've seen the most rejection. So that's all these wicks over here, 1, 2, 3, 4, etc. That point, and that also coincides with this, but that you will, it's like the beginning of an impulse. There's a name for this. I'm not like that theoretical with it, but this where like a downward movement really breaks and accelerates over here. This is also an interesting price point. Now, what you can then see, you can draw it in red if you want to help yourself. This area, so based on this wick over here with those highs over here, is an area of potential resistance if we get there. And you can see that this lower high in confluence with these resistance areas over here, after breaking market structure, because that's what happens with this lower low, this high is not one where you think, where the probability is at least is in your favor to go to 70K, 80K, 90K. Everybody's bullish around this area. That, like, make no mistake, yes, they're selling, but people are still thinking that Bitcoin goes to 100K over here, when actually the chart is telling you, hey, we're breaking market structure, we're reaching resistance, we're dealing with a high time frame bearish divergence, and all of those signals together can tell you at the very, very, very least to take some risk off the table, right? To sell some of your assets and simply like say, okay, you know what? I think there's weakness in the market. I'm going to take 50% or 20%. I don't know how you tweak, how you twist your knobs. But at the very least that you take some money off the table, right? Because the potentiality for this is that we actually move back to these levels, which are, and we'll talk about that at a later stage, that these levels, these lows over here, are interesting to look out for, right? So that's basically this entire area that can serve as a buying opportunity. So if you want to not be in this crypto or any market situation where you see, like a 50% drawdown, you see all this time your money disappear, but actually you work your way into a position where in this area you are the one sitting on some cash. This is, or at least one of the ways to go about that, right? It's a rough sketch, but I think this will do the job. And I've used this like, I don't know, many times. So break of market structure, a lower low shifting into a lower high. That lower high running into resistance is one that you want to be selling. I just got a call. That's the first time that this happens. Am I still recording? I'm still recording. And I'm going to round up to see what that call is about. But I think I've made my point anyway here. This is what market structure is about. So yes, it lines on a chart. We even have an ascending triangle, I don't know, patterns, etc. But I hope I've made it clear that price paints a certain picture, and with all these, like with a bit of indicators, a bit of patterns maybe, but like mainly market structure and price action. You could also incorporate candlestick price action in this, right? Let's see what that looks like over here, where we have like bearish engulfing, again, divergings, again, bearish engulfing. These are all signals of weakness in the market that large players are actually, or not necessarily large players, but people are selling. Okay. Where am I? Sorry, apologies. So that is a little bit on market structure. And just to give you like one example, let's go back to our AMZN, right? How can you not predict stock market tops? I don't want to use that terminology. Just use this for, trying to find moments in time where it's time to take some risk off the table. And like a very rough sketch of a trend line over here could be this. What do we see happening? Higher high, low, higher low, higher high, higher low, etc. We break the trend line, we make a lower low, and the The lower high that follows is one, again, based on this like high point over here with all the wicks on top of it, is actually one that you want to be selling, right? And you can tell me all you want about it's impossible to outperform the S&P, etc. I just know from experience that it is possible, and this is the methodology to go about that, because you would have saved yourself, again, a 50% drop, or perhaps you buy a little bit back, perhaps you buy back 10% lower, or based on levels here, like a little bit less. We don't know that, but by tweaking these knobs, you become, I don't know if you want, I don't like the term beat the market. You will become a better than average. Let me just keep my cool. You will become a better than average market participant. Okay. I think I've also, done the whole perspective thing already. Repeat this. I wasn't able to draw this, after a few weeks of looking at charts either. And this may still be a simplistic view, but as you can see, it worked on the Amazon chart really quite recently. And it's just because supply and demand factors, human behavior factors, and all this buying and selling, and the way that things are being bought, to what degree, with what volume, etc., that leaves trails, and we can work with those trails, as you can see, to at least have a probability of something happening that we expect. And that could have, before that has led us to say okay, you know what? We've had a good run. Bitcoin went from, 10K, or even like COVID drop, what was it? 4K, 4,200, depending on what exchange you use, all the way to 64 at that point. Maybe it's time to de-risk a little bit, right? And looking at a chart, by what we've just done, you can see that there are signals. And you can also incorporate the moving average cross, etc. There are so many signals that you can look at. The point being is that this is what technical analysis is all about. See you in the next one.